Welcome back to Explain the Charts. Today we're analyzing the SPY, the S&P 500 ETF, incorporating recent market news and in-depth chart data. Recent headlines point to a tough week for equities, with the Dow posting its worst week since 2023. Treasury Secretary Bessent's comments that corrections are healthy have dampened hopes for immediate policy easing. Concerns over economic slowdown and Trump's tariff policies continue to weigh on the market. Wall Street is also anticipating the Federal Reserve's meeting this week, with expectations that interest rates will remain unchanged. Let's see how this all correlates to the current chart. We'll start by looking at the daily chart of the SPY. Zooming in on the more recent price action on the daily chart, we can see the sharp downturn towards the end of the dataset, potentially correlating with the news of tariff concerns and economic slowdown. We can see the price struggled to break $600 many times in December 2024. Then in January, it continued to struggle to break $600, trading flat before dropping to the $570 range in late January 2025. It seems like it may have been struggling to find enough support to continue upwards. Now, let's take a look at the 1-hour chart for a closer look at the more recent volatility. Specifically, we want to look at the end of February 2025 when prices began to fall. Analyzing this time frame may give a clearer picture for how recent market events have been affecting the SPY. On the 1-hour chart, you can see the price dropped from $600 to the $580 range before finding a support to bounce off of. Given Bessent's recent comments about not intervening as much as hoped, this range seems to be an important range of support to look out for going forward. Now we'll check out the 15-minute chart to see the most recent data. Here on the 15-minute chart, you can see the price action for the previous days. We see the price struggle in the 560 range after it dropped hard. Then it mostly trades flat in the 561 to 562 range, but near the end, it drops and we can see a dip and bounce. Given the current market sentiment, there is likely to be continued volatility. Keep an eye on the $550 to $560 range as a key area for potential support. A break below this level could signal further downside, while a hold could indicate a potential bounce. The $570 to $580 area also marks a place to watch out for. Be sure to monitor news related to economic data and tariff policies to get a better estimate of price action, and good luck trading.